Hello, my name is Alan Robertson. I'm the BMA Scotland lead on pensions. I'm also an employee member of the NHS Scotland Scheme Advisory Board and a past chair of the BMA UK Pensions Committee. However, I'm not a financial advisor. These slides are provided purely for information and would always recommend seeking personal financial advice. I've prepared two presentations in order to help you understand the NHS pension scheme. In this first presentation, I'll explain the nuts and bolts of the scheme, how the different sections work, and discuss some additional features such as ill health retirement. The second presentation will solely focus on pension taxation. There are a number of terms to be aware of when it comes to pensions. The first thing is the state pension. You can check your personal tax account on the gov.uk website to ensure you've received appropriate credit for national insurance payments or exemptions that you've received. A key concept to be aware of with pensions is the difference between defined benefit and defined contribution. The latter is almost ubiquitous in the private sector nowadays. With that type of pension, any money you pay in is added to a pot that's generally then invested in the stock market. At retirement, you then either purchase an annuity that will pay an income for life or look at alternatives for the new pension freedoms that are available. How much pension you have therefore depends on stock market performance. By comparison with defined benefit schemes, such as the NHS pension scheme, you're paying a contribution and in return receiving certainty about what benefit it will provide in retirement. There's no pot of money invested in the stock market for the scheme, so pension contributions from those working pay for the pensions received. There have been changes in recent years to get more of the population saving. Auto-enrolment was designed to automatically sign employees up to occupational pensions. In general, this was common in the NHS anyway. However, it does have importance for those that opt out, as they need to be aware they'll then automatically be opted back in after 3 years. When it comes to pension contributions, there are two sources, the employee and the employer. Pensions are, after all, deferred benefits as part of the employment package. Employers contribute 20.9%. This recently increased from 14.9%, with the additional 6% currently coming from Treasury. The individual member contribution varies by pensionable earnings, as you can see in the table. Tax relief is received on pension contributions. However, this is in some ways negated by steep tiering. That's something we've been fighting to address. When looking at the rates for post-2019, the scheme yield has been slightly above target. The current scheme design gives less justification for the tiering that's been in place for many years now. We had been working through the Scheme Advisory Board to address this. However, all discussions on new rates have been put on hold by a legal case brought by firefighters and judges, which has an impact across the public sector. As a result, the Treasury have decided these discussions will have to wait for the outcome of the legal process. You can see from your payslip how much you've been paid in each month and for the past tax year. We have a separate guide for understanding your payslip that's well worth watching and is available on the BMA website. There are 4 different NHS pension schemes. They all have similar regulations and terms, but it's important to consolidate your service. So if you've worked elsewhere in the UK prior to working in Scotland, then contact the SPPA so you can get this process underway. There are also 3 different sections to the scheme, which we'll now come on to. Let us first look at the 1995 and 2008 sections for secondary care. The 1995 scheme, as mentioned, is a final salary scheme. Your pension is calculated as 1/80th of your final pensionable pay for each year of service spent in the scheme. Your final pensionable pay is the highest pensionable pay in the last 3 years before retirement. If there are any periods spent working less than full-time, these are scaled accordingly. This section has an automatic tax-free lump sum of 3 times the annual pension. The normal pension age for the 1995 section is 60. The 2008 section came into effect on the 1st of April 2008, and the 1995 section was closed to new members at that time. There was a choice exercise run whereby existing 1995 section members could choose to transfer to the 2008 section. There are some key differences between the 95 and 08 sections. Firstly, rather than being based on 1/80ths, it's instead based on 1/60ths. On the face of it, that's an improvement. However, it also comes with a change in definition of how your pay is used to calculate the pension received. It also comes with an increase in the pension age to 65 and no automatic tax-free lump sum, although you could convert lump sum to pension at a rate of £12 lump sum for every £1 of pension. Instead of using final pensionable pay, the 2008 pension is calculated on your best 3 consecutive years of reckonable pay in the last 10 years of service. Now, this could be a slightly complicated calculation. The BMA website has some examples showing how that's calculated. It's important to be aware of how different types of income are categorised when it comes to pensions. The basic salary, up to 10 programmed activities, and other defined elements such as discretionary points, availability supplements, locum work through the staff bank are all pensionable. However, New Deal banding for junior doctors is not, neither are waiting list initiatives, extra programmed activities, professional fees or any private income. If you want to see the current pay scales, these are published on the Scottish Government website. This is the table for each grade in secondary care, apart from consultants, on the current contract. For those doctors, amounts are as shown. In particular, please note the annual increases for the first 5 years and then the stepped increments thereafter. This is of importance when we come to look at tax in the next presentation. So, how do we calculate the pension due in the defined benefit NHS scheme? Well, for the 1995 section, it was really quite easy. Work out the final pensionable pay and multiply it up. In this example, there had been a pay rise for the last 9 months, so this has to be taken into account pro rata. 36/80ths of that gives the annual pension, and then the tax-free lump sum is 3 times that. For those working reduced hours at the end of their career, this is taken into account by scaling the service. For example, 2 years at 5 rather than 10 PAs would be equivalent to 1 year of scaled service. The core scheme is the same for those working primary care, however there are some key differences when it comes to looking at income. In particular, there's the concept of dynamising. Your benefits are based on your total career pensionable earnings. These earnings are increased every year by the dynamising factor. At retirement, the total of your dynamised earnings is multiplied by the accrual rate to provide your annual pension. If you're contributing to the 1995 section, you'll receive a pension based on an accrual rate of 1.4% of your dynamised earnings plus a lump sum equal to 3 times the annual pension. If you're contributing to the 2008 section, you'll receive a pension based on the accrual rate of 1.87% of your dynamised earnings. There's no automatic lump sum payable from the 2008 section. This is an example of how the dynamising works, basically ensuring that the purchasing power of the original income is maintained. The other factor that needs to be taken into account for GP earnings is any salaried service that has occurred throughout the career. In this example of a member in the 1995 section, you can see that they've worked for 3 years prior to becoming a GP. This means that simple uprating is applied to take account of this extra service, which also then feeds into the lump sum calculation. We'll now move on to look at the 2015 section, where you'll see that a similar revalued earnings model now applies across primary and secondary care. The background to the changes were the Hutton Review in 2011. This made a number of recommendations, which were accepted in full by the government. In particular, it led to a linkage of the normal pension age for the scheme to the state pension age. Final salary was replaced with career average revalued earnings. These changes were implemented in April 2015, although with some protection, including tapering protection, for those near to retirement at the time. As I say, the 2015 scheme now means that the normal pension age in the scheme is linked to the state pension age. This was gradually brought up to 65 for women by November 2018. Since December 2018, it's now gradually increasing for both men and women, eventually reaching 68. So for those born after the 6th of April 1978, the normal pension age for the 2015 service will be at least 68. The state pension age continues to be kept under review, and this could change going forward. As mentioned, the 2015 scheme is a care scheme. This means that rather than buying a year of service, as was the case in 95 or 2008 secondary care schemes, you're now obtaining a proportion of your pensionable earnings that year as pension. This is then increased over time through a revaluation factor of the Consumer Price Index plus 1.5%. This scheme came with protection for those close to retiral. It is these protections that have been the basis of the firefighters and judges' legal challenges that I mentioned before. The BMA has also launched its own action challenging their legality. Any accrued rights in the 95 or 2008 scheme were protected, and you're still able to draw these separately at the normal pension age for those schemes. Added years contracts were also allowed to continue. So how does care work in practice? Well, let's assume you had £75,000 of pensionable earnings in a year, and CPI was 3%. Your pension would be 1/54th of that, and it would then be increased by the revaluation factor of 1.5% plus inflation. This means your pension contributions for that year would have bought you £1,452 of pension. Going forward, that would then continue to be revalued and added to all your other years of pension. A couple of brief points about retirement. As I said, the retirement age for each section varies. You are able to take early retirement before that, which is even earlier for those with mental health officer status. However, there is an actuarial reduction of around 5% per year for each year you take your pension early. It is possible to take it later too, with enhancements in some sections, although with an overall cap too. If having to retire early through ill health, the pension will be enhanced, and I'll cover this shortly. If you want to return to work after retirement, there are a few rules to be aware of. In general, this is considered more in primary care than secondary care, where it can be difficult to get clear agreement from an employer. Either a complete break in service for a month is required, or a 24-hour break followed by a limit of 16 hours a week for the first month. Up until normal pension age, there's a limit on total earnings when returning to NHS work after ill health, called abatement. This means the pension is reduced to the point that the combination of ongoing NHS income and pension do not exceed pre-retirement income. The NHS scheme also offers a number of other benefits as part of the overall package. Ill health retirement benefits are split into two tiers. Tier 1 is for those deemed permanently incapable of carrying out the duties of their own job. Tier 2 is for those assessed as being permanently incapable of carrying out the duties of both their own job and additionally of engaging in regular employment on a similar full or part-time basis as they've currently been working in the NHS. Tier 1 means existing retirement benefits that have been accrued are paid with no actuarial reduction. Tier 2 gives entitlement to the retirement benefits that have been earned to date enhanced by 2/3 of the prospective membership up to the scheme's normal pension age. If a member unfortunately dies whilst they're a member of the NHS pension scheme, it offers support to the family. Although the calculation is subtly different, in essence each section offers a lump sum equivalent to 2 years of earnings. In addition, there's an ongoing pension payable to a dependent adult and/or dependent children. The 1995 section offers the most generous terms, with the 2015 scheme the lowest of the three sections. These dependents' benefits are inflation-proofed and payable for life. They are payable to unmarried partners meeting certain criteria, and for those marrying after retirement, there are again restrictions on which service counts. For widowers' pensions, only post-1988 service is taken into account. This is something that was challenged in a judicial review in 2011. Unfortunately, although the principle was upheld, it was decided it would cost the government too much money, between £3 to £4 billion, to set this right across the public sector. Children's allowances are payable to age 23 or indefinitely if the child remains unable to earn a living and the condition existed at the time of the member's death. Some members may decide to opt out of the pension scheme. In this situation, it's important to be aware that this leads to a change in the death and service benefits. There are therefore benefits available whilst an active member of the scheme, as outlined in the previous slide, and then those available when death occurs within 12 months of leaving the scheme. Additionally, those that apply when the doctor has been out of the scheme for over 12 months. This slide gives an idea of the sort of differences one may expect, although this does vary slightly by section and fuller details are on the BMA website. For some members, especially those working part-time, they may wish to look at improving benefits. In the past, this was mainly done via the added years scheme. However, it's been closed for a number of years, so only those with extant contracts are able to continue to accrue these. It's possible to make additional pension purchase, pay into a personal pension, or look at additional voluntary contributions. Additional pension purchase is in blocks of £250 of pension up to a maximum of £5,000 per annum. It increases in line with inflation pre- and post-retirement and can be bought in addition to added years. It can be bought as either a lump sum or regular deductions. In the past, this was mainly done via the added years scheme. However, it's been closed for a number of years, so only those with extant contracts are able to continue to accrue these. It's possible to make additional pension purchase, pay into a personal pension, or look at additional voluntary contributions. Additional pension purchase is in blocks of £250 of pension up to a maximum of £5,000 per annum. It increases in line with inflation pre- and post-retirement and can be bought in addition to added years. It can be bought as either a lump sum or regular deductions. However, as we'll see in the next presentation, given the current pension taxation rules, this is not necessarily desirable for many scheme members. Instead, they may wish to look at contributing to other tax-efficient non-pension schemes such as individual savings accounts. Hopefully, this has given a reasonable introduction to the various components of the NHS pension scheme. There are two key places to look for more information. The first is the SPPA. Their website provides scheme information, and if you sign up for their My Pension service, you're able to access your pension estimate and check your service record is correct. The BMA Pensions Department is the other key source of information and help. They cannot give individual financial advice, but the website has a vast amount of information and worked examples. Also, if you're encountering any problems with the SPPA, they're often able to help. To summarise, it is important to understand which components of pay are pensionable and which are non-pensionable. You need to be aware of which section or sections of the scheme you are in and how your pension is calculated. Unless you're a protected member near retiral or have only started after 2015, you will be a member of two sections. You need to consider the other benefits of the scheme, such as ill health retirement and death in service, that may be reduced if you opt out of the scheme. However, you also need to be aware of the potential tax implications of ongoing scheme membership, and that is what we will discuss in more detail in the next presentation.